one of my favorite little patterns here. I'm calling it the head and shoulders. I'm sure you've heard of this. I'm sure you've seen it before, but have you ever seen it on a 5-second chart in a downtrend? So that's what I'm going to show you right now. This is a trade that I just took. Well, I took the first part of this push down. Here, the London session, we've started to get a little bit of selling. And I noticed that, even though it was a little choppy, we're definitely in a new downtrend here, indicated by the rapid descent of price relative to what we've been doing for the last couple of hours or hour or so. So we had a breaking through of all our EMAs and a push down and some pullbacks against some of our EMAs here, and then we had a one touch almost of the gold line here, which is the 1 minute 20. That's a very strong area of resistance, especially the first time. Second time works too, and that's what I want to focus on right down here. Actually, the third time works as well. So here's the second one. Okay, and something I want to show you with this. I call this a wonky MACD head and shoulders. Okay, you should always be watching the MACD and price. Okay, so when price gets up to the first touch of any substantial resistance point, like the blue line here, like the gold line here, you want to look down and see what MACD is doing too. Okay, in this particular instance, when we almost got to the gold line, MACD really wasn't all that interesting. It just gave you a spike and a pullback. So that one was kind of hard to find a pattern on. The better ones are usually the ones with a pattern. Now this one, this almost touch to the gold line had a definite pattern. I call it the wonky MACD head and shoulders, for lack of a better name. And what I really like about this pattern is that it is a triple top pattern. Head and shoulders is a triple top pattern. But what it shows you here on the right shoulder has the fast line under the slower line, or the MACD line under the signal line, technically, if you want to be technical about it. So what does that mean? That means, generally speaking, that out of these three tops, 1, 2, 3, the third one is very weak. Okay, the third one is very weak. Why? Because the fast line has back tested the signal line. It's under the signal line during the back test. However, you've probably got divergence up here. You do. Okay, divergence means that price is where it shouldn't be. Okay, price is making a new high in this little pattern, right? And if you compare these highs, this one, and this one, to these highs, which is showing you how actual much strength they have, okay, you'll see that whoever's buying up here is sadly mistaken, because there's no internal strength left. Okay, you've got your MACD much weaker and signal line holding it down. Okay, so whoever's up here is buying up here is sadly mistaken. There's no internal strength in the market left anymore, and this one is more than likely not going to work out. Okay, so that's a great entry. I also saw another one like this yesterday. I don't remember exactly where it was, but that is a really nice pattern. And if you are pretty good at holding through the initial pullbacks, this one turned out to be an amazing trade, right? Coming down about 1, 2, 3, 4, 5, 6, almost 7 quads, okay, which is 175 points, even on 5 minis, okay, even on 5 little minis, you're looking at $1,750, okay, so maybe like a $250 risk, which would be 1 quad on 5 minis. You could have made 1,750, which is a risk to return of 7 to 1. Okay, so that's something to keep in mind. Now here's another one for you. This is more of a traditional head and shoulders found on price. Okay, so sometimes you're going to see the head and shoulders found on the MACD. that look really good, and sometimes you're going to see them finding on price that look really good. Once again, it's a push up to this gold line, which is the 1 minute 20, which is the second of our primary EMAs that we work with. We work with the 1 minute 8.5, the 1 minute 20. These two lines are the 5 minute 8 and 9, and these two lines up here are the 15 minute 8 and 9. Okay, so these are the primary areas of resistance that we work with, and sometimes when they line up with a horizontal level, they make extremely strong resistance levels during downtrends. Okay, now let's take a look at this one. This one was more of your classic head and shoulders. Okay, in a downtrend, a head and shoulders represents a reversal pattern, kind of the end of the bear flag, as it were. If this is your bear flag here, then this is going to be the end of the bear flag, okay, as it crosses through. So again, just look for these patterns. You've got, this is indicating a change in trend when you have, you know, one top, two top, three top, third top much lower than the middle top, and then a break in the bear flag trend line. Okay, so keep these little patterns in mind as you're trading. Always look for patterns of three. I call my company three-wave trading because I love the patterns of three. They pop up over and over again, and it's really hard as a trader to not want to take that first, you know, that first kind of, hey, it's reversing, you know. It's like you see it coming up to an area of resistance, you know you're in a downtrend, you're looking for a big pullback, you see it come up to the 77, for example, and pull back, and you're like, we're good to go. No, you're not good to go. You know, you want to see lower highs, okay? Lower highs in the process, all right? Lower lows too, but especially lower highs, okay? That's the real secret for selling, okay? So keep that all in mind. These are great patterns. They work out really good. Just to reiterate one more time what we were looking at just now. We were looking at MACD, okay, on this one, all right? MACD on this one, showing you that that head and shoulders with the right shoulder under the signal line, okay, even though the it kind of corresponded with the top of a higher high here. You had a lower high down here, creating divergence. Okay, so that's something. Keep that in mind. Look at MAC. Always be looking at MACD. What's MACD? You want to cross, and generally you want to see a cross and a price back test before you do anything at all. Okay, when you're selling a rally. Okay, so did we get that here? We got that down here in the form of this cross, the second cross, and a price pullback. All right, so keep all this stuff in mind as you trade. I know it's a lot to think about, but these are very, very, very profitable patterns. Okay, and just kind of study these on your own and come to recognize them. All right, thanks.